Perfect. Hi, hello, good morning, good evening, everyone. I'm Ella, Community Manager here at COREangels. Welcome to the 10th installment of Business Angels Talks. We are very happy to see you all here. Some of you are going to join later, but in case you are new to COREangels community, we are over 3,000 angel investors, leaders of angel funds who are also on this call today. And angel investing learners from all over the world. And Business Angels Talks are our online monthly webinars for our business angels and angel investing learners who've been following us so far, where we explore themes and trends in angel investing. If you like to see the previous sessions of Business Angels Talks, you can just head over to coreangels.com/coreangels events, and you can see upcoming events and the past events that we have recorded. Before we start, I would like to remind everyone that this session is being recorded, and we will dedicate something like half of the hour for questions and answers. So during the presentation, if you have any questions, just drop them in the chat, share them with us, and then we will ask our host, who is also the moderator of the session, to ask our guests the questions. And today we are exploring the exciting world of blockchain and tokenization with the founder of Token City. I would like to invite our host, Pedro Bandeira. Pedro, please.
Thank you, Ella. Welcome, everyone. So today we will talk about blockchain and tokenization, and I know that for some of you, you are already into the topic and you have some doubts already. And some of you are exploring this area and wanting to know, more how it works. So we invited Yael to share with us, founder of Token City, to share with us, the basics first in this session about blockchain and tokenization for us to understand how it all works. And then after that presentation, we'll have a Q&A moment. So I will invite you, even during the presentation, you can start raising questions during the presentation, no problem. But those questions, you should go in the bottom right corner of your screen, next to the chat icon, you have an activities icon. If you click there, you will find Q&A. All right. So when you click on Q&A, then you can have a question, or you can upvote a question that another person in the meeting raised, right? So we will give priority to the questions with more upvotes, and that's the way it will work. So don't be afraid to raise questions, and then if similar questions come, I will moderate that, and we'll drive the conversation with Yael to answer as many questions as we can. Of course, this webinar is about everything you need to know. Of course, we will not address everything that you need to know, but we will address some topics to start with and to understand the basics. And then in the Q&A, if you want to deep dive on something, let us know so I can ask Yael to go deeper on that topic. Okay. So you're here not to hear me, but Yael. So Yael, please share your screen, and the floor is yours. And thank you again for being with us.
Okay, so thank you very much, Pedro, and thank you very much to COREangels for the invitation to spend this time with you this afternoon or morning, depending on where you are. So let me share the screen. Okay. Can you already see the presentation?
Yes.
Okay, great. So today we are talking about blockchain and tokenization. We are talking about the basics, the essentials, a few, let's say, concepts at the beginning, And then we will go a little bit deeper with some examples. And then in the Q&A, we can solve any question that you can have. So, but before doing that, let me introduce myself briefly, very briefly, and also to share with you a story that that is in some way at the beginning of the creation of Token City. So my background, my general background is technical. I am an engineer. After studying engineering and then a master in management of technology, I start working in technology, innovation, and then investing. I work in fundraising for companies too. And then at a moment, a few years ago, well, I created a software company to digitize entrepreneurial ecosystems. And then I created a regulated crowdfunding platform. And while I was working at this crowdfunding platform, something happened. And this story is that an investor came to me and he said, okay, I've seen this project that is published in your platform, and I would like to invest 60,000 euros in the project. And I say, oh, wonderful, it is a very good project, wherever I was explaining how the project. And at the end, she told me, okay, I'm telling you all that, but just to be clear, I want to be sure that I'm going to invest now 60,000 euros, but if in a year or so I want to take that money because I need to buy an apartment, then I can take that money out and at any moment that I want, right? And I say, oh, no, it doesn't work like that when you invest in a startup. Usually you invest because you want to the business to grow in value, and then you can sell it for a higher value, and so on, so on, so on. And so when that person discovered, it was her first investment into a startup. And when she discovered that her investment was going to be an illiquid investment, she decided to invest, instead of 60,000 euros, she decided to invest 3,000 euros. What I mean by that is that, well, if we were able to provide more liquidity to investments, capital will be like more fluid. We will get more investment for the companies, and also investors will be able to manage their money in a more efficient way. So at that moment, at the same time, I was exploring blockchain and tokenization and everything. This was about 2018, and so I realized that tokenization will become, or I thought it will become, the future of investment, and I thought that, of course, it will be a more advanced way to make crowdfunding. So I decided to found Token City. And why I think that is completely disruptive, and why it is important, because through blockchain and through the tokenization, this technology allows investors to, for the first time in history, there is a technology that allows any investors in any place of the world to share value, to share a piece of value with any other investors in any other part of the world, without any third party, without any intermediary, in a very, very secure way, and also into an immediate way. So this is new. This is different from how system works today. If you want to transfer money from here to, I don't know, to the United States, you need to go through an intermediary. You need to go to your bank. You go to your bank, you order the transfer, and there is an organization in the middle that provide that services. But with blockchain, you can directly, with this type of protocols, you can hold your value yourself, and you can transfer this value also yourself. So let me go to some very, very basic concepts related to how blockchain works. I'm not going, let's say, deeper in the technology. I'm not going to explain how blockchains are or how it works. Only I'm going to explain you in a very, very practical way the impact, what that means. So in a blockchain, how users interact with the blockchain. So you are an investor, you are a user, and you have a wallet. A wallet is a software that allow you, in a very simple way, let me tell you, it's like it allows you to hold your value, your coins. Your coins represent a piece of value or a piece of cash or a piece of value of something, okay? And you hold this piece of value in your own wallet. Let's say your wallet, it is an application in your mobile phone, for example. And only you, through your private key, only you can transfer this value to another person. When you make a transfer, there is a validation process. Each blockchain has a different protocol, and this protocol is the way in which transactions are validated and accepted for all of the members of the network. So each protocol incorporate a different technology to validate the transaction, to say, okay, this transaction is real and it is validated. All these transactions are registered, let's say, in a kind of a common truth, like a history of transactions, in a way, also in a cryptographic way, in which this information cannot be manipulated. So this is why it's secure, because all the transactions are like grouped into what is called block, and each block is chained to the other block, and you cannot manipulate the transactions that are being validated and close into a block. So this is why we say that blockchain is immutable, because it cannot be manipulated. But what is more important is that there is a common history of transaction that is accepted by all of the members of the network, not only a central institution, but all of the members of a distributed network. And all of the members of this network hold a copy, an exact copy of all these transactions. So it is a distributed database. There is also not only a one point of attack, let's say, but it is distributed in all of the nodes of the network, and all of the nodes keep a copy of this information. So what I mean is that there is a new system that is completely decentralized, but is secure. And in this kind of system, this blockchain, you can hold your assets, and you can commercialize, you can trade with those assets in a very direct way. And this is really disruptive. And this is impacting all the financial sector. Just to make a comparison with like all the evolution of the internet, we usually say that at the beginning we had Web 1, that it was like an open way to share information around the world, to make information accessible to anyone in the world. With Web 2, we start developing application in which we provided or we facilitated like social exchanges, all the social network and everything. And Web 3, the difference from all these Web 1 and Web 2, we usually say that it allows to share value, to share assets. So many times also we say, okay, many years ago, if you wanted to transfer a piece of information from one point to another one, you needed to send a letter, like to write a letter into a paper, and then you went to the post and you send it in that way. And then a new service that was the email was developed, so you could send information in a digital way and instantaneously. So the same analogy is applied with blockchain to the value. So with blockchain, you can take a piece of a house, let's say a piece of a value of an asset, and you can transfer this piece of value to another part of the world also in a very secure and instant way. So for this reason of security, sovereignty, that is instantaneously, this is a major trend. So there are a lot of analyses and studies around the world that estimate that tokenization is going to grow a lot during the next years. And for example, the World Economic Forum estimate that more than 10% of global GDP will be in DLT technologies. DLT technologies is distributed ledger technology. Blockchain is DLT technology. At the end of this decade, they estimate that more than 10% of the global GDP will be on DLT. And the reason is all the reason that I explained you, like all the transparency that this kind of system can provide, democratization, because anyone from their mobile, any place in the world can participate in this system, because it's efficient, it's agile, and I will go deeper later to explain better, because which is liquid, and also is more global. So, okay, so this is the technology. And that what is tokenization? And before that, let me tell you who is tokenizing their assets and why they are tokenizing their assets. So in our experience at Token City, we see that we have like three main big group of companies or persons that are interested in tokenizing. From the first one are business. What we have identified and we are leading with our client is that any kind of business are tokenizing their assets. And when I mean tokenizing their assets, I mean that when a business is growing, during the process that they are growing, they are creating many different kinds of value. They are generating revenues, earning, ownership of a business. They are creating IP, intellectual property, and many different kinds of value. And what they are doing is that in a very, very creative way, they are digitizing this value in blockchain. They are fractionalizing this value in a small piece that are the tokens, and they are selling those tokens to their community in exchange for money. So they are funding their business, selling their tokens, and those tokens represent part of the value of the business that they are creating. So businesses are using tokenization mainly for getting funding, but in many, in new ways. So for the companies, tokenization means an alternative, a new way for access capital in a more direct and efficient way. From another group are asset managers. So these organizations that are managing assets from other companies, investors, they are managing, let's say, like loan portfolios, or they are investing in companies and they are managing assets from other companies, right? So from these kind of clients, what we see is that they are very interested in tokenization because they allow them to manage their assets in a much more efficient way, and also in a much more liquid way. Because when they fractionalize the assets, they can also resell it. And when they resell these assets, they can also, they let's say they raise money, they invest, for example, in loans. But when they tokenize these loans, they tokenize the loans, they obtain the token, they resell the token, so they get back their liquidity to realize more operations. So they gain a lot of liquidity, and in that way, they make their business more liquid. And on the other side, we have investors. And why investors are interested in tokenization? Well, they are invested in tokenization because they are investing, and as a proof of their investment, they are obtaining tokens. I mean, the tokens represent the value, the right that they acquire when they invest. And this format of token is much more liquid because it can be transferred in a much more easy way. And this is the part of the definition of liquidity, that you can convert it to cash more easily. So they have this piece of value in their mobile, and they can exchange this piece of value for any other piece of value, including cash, very easily. And after that, there are many other things that I'll go deeper later, that is related to where all these tokens are negotiating. I mean, where all these tokens can be sold, so that all these investors can get liquidity back. But I'll go deeper to that later. But in summarizing, you have business, asset managers, and investors, all of them going in this new format of creating value and trading value. So let me explain, so I'm talking about tokens, and I'm talking about tokenization and blockchain, but what is a token and how are they created? When you talk about tokenization, what you are really doing is taking any kind of economic right, you digitalize this right into the blockchain, you fractionalize it, and then each piece of value of this right is a token. Let me put you an example. I can take a company, and I say, okay, this company has 3,000 shares. Okay, I'm going to digitize the property of this company, and I'm going to create 3,000 tokens, and I'm going to say that each token is a share. Or I have a loan. Someone provided me with, let's say, 100,000 loan. So I have to pay that person back 100,000 euros. So let's say that I'm going to tokenize that contract, and I'm going to create 100,000 tokens. And I'm going to say, okay, each token represents €1 of this loan. I give this token to my investors, and I tell the investor, okay, now you have this token. This token represents your right to come to me and tell me, hey, Yael, you have to give me back my euro with this interest and in this, let's say, time and all the conditions related to the law. But what happens there is that the investor has the token at his mobile phone, and now I have to pay him back €1, but maybe he wants to get his euro back before year 3. That is what we agreed. So he can take his token and he can sell the token to another investor in a very easy way. So the other investor provide him with that euro, and now my company will have to pay this euro with the interest, but to the new investor. So what I mean is that when selling the token, what the investor did was to transfer their credit right to another investor. And I mean, this example is the same for any kind of economic right that you are going to tokenize. So when you are in a process of a tokenization, the main important thing when working with a client, or if you are going to tokenize something, the most important part at the beginning is to define very well what the token is going to represent. It's going to represent a piece of a share of a company. It's going to represent a piece of a loan, a piece of future earning, a piece of what. So this designing of the meaning of the token is called tokenomics. Depending on what this token represents, there is certain legal aspects to take into consideration or others. In all this world of tokenization, we are talking about financial instruments in some case. So is it possible that when you tokenize something and you have the token and you start trading with that, this is a very regulated market too, so it's important to take into account also all these kind of things. And then when you have already designed what the token represents, then, which is a definition process, then you can to create what is called a smart contract, which is a piece of code that when I say I'm going to digitalize this right into the blockchain, what it means is that I'm going to create a piece of code, informatic code, this is a process of tokenization, that say the rules in which this token is going to work. I'm saying to the informatic program, I'm saying okay, I'm going to create 1,000 tokens. This token only will be able to be transferred only after a year, and those are the condition of the loan. So interest will start being paying back at month 10, and at this rate. And all the rules related with the operation are controlled through this smart contract, which is a piece of code that is executed again without the need of any intermediate design. And if it's going, it's based on the initial agreement that we had. Another important things to take into account is that when we are talking about tokens, we can represent through tokens many different kinds of value, because we can tokenize anything. So in this slide, what we try to represent is like a whole picture of all the different main kinds of tokens that we have in the market, from the world of let's say cryptocurrencies to the security tokens. On the left, you see here native right cryptocurrencies. Native cryptocurrency is like the native unit of value and unit of transfer inside a blockchain, which is used for all the nodes of the blockchain, use a unit of value to measure, certain incentive when they do, for example, some kind of job for the blockchain, for the community. They receive an incentive, so they create the blockchain. Most of the public blockchain works with a native cryptocurrency that regulate like the transaction inside this ecosystem. For example, Bitcoin is the native cryptocurrency for the blockchain Bitcoin. Ether is a native cryptocurrency for Ethereum. There are many different blockchain. Each one of them works with different protocols. One of the most common are Bitcoin and Ethereum, but there are many other blockchains, and they have their native cryptocurrency. And then there is other kind of cryptocurrency which are called a stablecoin. A stablecoin are cryptocurrencies that represent or are linked in a relationship one with a fiat currency. For example, I create a cryptocurrency that represent $1 or is related one-to-one to $1 or €1, or so. It is a way to put the traditional money into a crypto format to allow all these kind of agile transactions. And then after that, in all these blockchains, there are some of those blockchains that allow to create smart contracts over them. And when you create this kind of a smart contract, you are able to tokenize, which means you are able to digitize using this technology to create piece of value that represent many other kinds of things. When you create a piece of utility, you create a token that represents your right to use a service, for example, These tokens are usually called utility tokens. When you create a token that represents something that is unique, that cannot be replicated in any way, for example, a piece of art or something like that, a design or whatever, this is called an NFT, non-fungible token. For sure you have heard about NFTs. So NFT is a kind of token that cannot be replicated, and it's usually used in art. And then you have another kind of tokens that are commonly named as digital assets, or in some kind of security tokens. And those tokens are tokens that represent economic rights or represent traditional financial instruments. So shares from public companies, or loans, or a piece of futures, or whatever, like financial instruments that are digitized in blockchain. They are called security tokens, and in a more general way, they are called digital assets. So the whole process from someone that is a company that is tokenizing their assets, in the first moment, in the tokenization process, there is a moment at which they structure the operation. That means they define the tokenomics, they say exactly what the token is going to represent, what they are tokenizing for. They are tokenizing to get more liquidity, they are tokenizing to get funding, they are tokenizing to incentivize their community around them, providing tokens that give some kind of incentive for utility, right, or whatever. Why they are going to tokenize, what the token is going to mean. All this process is let's say the structuring phase. Okay. After that, you need the technology. You need the technology to create the smart contracts, to create the tokens, and also to manage all these tokenized assets, to manage the token. But then you need the markets, because you need also to, if you are going to create tokens as a company, you also need to help your investors, to help them to find places in which they will be able to trade with those tokens. So there are two main infrastructure for trading the token. There is what is called primary issuance infrastructure. That means a market in which the company sell tokens to their investors. And then there is another infrastructure that is usually called secondary trading. And in this secondary trading infrastructure, the investors are trading among them. So they are not providing money to the company and the company providing tokens to the investors, but they are selling their tokens to other investors. So they are buying and selling tokens among them. And when we are talking about when we are talking about cryptocurrencies and utility tokens, or even NFTs, there are a lot of exchanges in the market that you probably know. Like, for example, Binance or Coinbase. Those are like centralized exchanges, but you also probably have heard about decentralized exchanges as Uniswap or Balancer, or all these infrastructure that allow investors to negotiate, to trade with their tokens, their crypto. But when you go to digital assets, there are these tokens that represent economic value. As it is a much more regulated environment, because you are talking about, as I say, economic right. You are entering completely in the financial ecosystem, so it is much more regulated. So in this, for digital assets, this is how it's negotiated in the market. For primary issuance, you usually have either private markets, and when I mean private markets, I mean what is traded between the company and the company's ecosystem. For any business, all the clients and investors and employees, some funds, and anything around the company, and which is like, I mean, it is its own environment. And then when you want to go public to a much more global environment, like much more massive, like communication and everything, you usually need to go through regulated markets. And in these regulated markets, this is the place where the investors can go, can find the companies that are selling the token, and they can buy the tokens there. And this is for primary issuance. And when you are talking about trading, secondary trading, again, you have like two kinds of environments. You have private spaces in which the company that issue the tokens create also an environment around them at which investors can trade the tokens, but in a peer-to-peer basis. They negotiate directly among them to trade the tokens. And then when you want to, I mean, when there is an organized market in which there is some kind of entity or software that is coordinated the interest from the investors, selling interest and buying interest, then you need a regulated environment. You need regulated secondary markets. And there, as I said, you have an entity, a regulated entity, usually that through a software or through other other process, they are matching selling interest from investors with buying interest from investors. And when there is a match, they are facilitating this trading among them.
Yael,
Yeah.
sorry for interrupting. Can we save the regulatory topic and examples for the next session so we can have some time for questions?
Sure. I go directly to. Do you want me to share the examples, or do you want to go to the questions?
Yeah, we only have 20 minutes. It's just to save some time for questions. So.
Do you want me to save the examples for the next session, or go to? Okay.
Yeah, please,
okay.
please.
Okay. So we can go directly to the questions now.
Thank you. Then in a question, if something comes that you can answer with an example,
okay,
feel free to use it.
Great.
Thank you, Yael, and thank you for the questions. So starting straightforward, you already answered this a little bit, but just to make sure that this is clear for everyone, what is the difference between a cryptocurrency and a token?
Yeah. Okay. So what is called a cryptocurrency is usually, as I said, the native coin from a blockchain. When a blockchain, a blockchain is a technology, but it is also a way in which people organize around a new technology. What I mean by that is that when I explained at the beginning that you need a validation system, and this validation system are like people with their computer performing certain tasks or joining their asset in a certain way, but in order to do that, they need some kind of incentive. So let's say the coin that the network, the blockchain network, create in order to provide this incentive to their own nodes to validate the transaction, it is usually the cryptocurrency of the blockchain, what is called the native cryptocurrency of the blockchain. Now, all these blockchains, or some of those blockchains, allow to create piece of code on them. And these smart contracts allow to create other tokens that represent other things. And as I mentioned, other things are utility tokens or security tokens or wherever. Sometimes some of the utility tokens that many of the companies are created are also called cryptocurrencies. But to be very purist, it's not a cryptocurrency in a very, let's say, essential way. Because in a very essential way, this cryptocurrency is the native cryptocurrency of the blockchain, like Bitcoin for the Bitcoin network or wherever. And sometimes these like utility tokens are called also cryptocurrencies. So, but sometimes are tokens in the sense of they have been created as a representation of another thing.
Right.
When the Bitcoin is not a representation of another things, the Bitcoin is like the unit of value that is created to incentivize the network of Bitcoin.
I think for angels thinking about tokenizing angel investing, one thing that is important to be clear for everyone is that investing in a startup or in an angel fund through a token is completely different than trading cryptocurrency, right? So people connect things a lot. You're not buying Bitcoin. You're not buying. You're investing in a startup or in an angel fund through a token. Is a completely different thing, even if we are using the same technology behind it, right?
Exactly, and usually tokens are related to what I call digital assets.
Right.
Tokens are the representation of a piece of an asset, a piece of a home, a piece of a building, a piece of the future revenues of a new business or wherever. Yeah.
Exactly. So following up on that question, can you make it straightforward to us? Like, what does it look like for an angel that invests in a startup through a token or invests in a tokenized angel fund? What it looks like? Because now, if an angel invests in a COREangels fund, they will sign an agreement, they will transfer the money to an account, they will have a shareholders agreement with the other investors, and this is they will sign documents and they have those rights. What does it look like if they are investing in a COREangels fund that is tokenized?
Yeah, so it is very easy. You put your, I mean, it depends. Let's say if you want to pay with fiat or if you want to pay with crypto. Let's say you pay with fiat. So you transfer your money and you receive your tokens, and that's it. What is the important part here? The very important part is that the token that you receive in exchange from your investment exactly represent a real right for something. So you need to be sure that when you pay 100,000 for 100 tokens, you receive the 100 tokens, and that means these tokens represent a real economic right. And if, for example, is a loan, and if the company doesn't pay you back, you have your token and you really claim that loan in front of a judge. So this is the important part, that the token really represents the economic right. I'm not going deep, very deep. I'll go deeper with the regulation in the next session, but just to mention that, for example, a couple of weeks ago in Spain, there is a new regulation that recognize for the first time they changed the law to recognize as a new way of representation of shares of the company, blockchain as a new way of representation of, you go one way, you go to the notary and you say, okay, I have created 100 shares, and another way, they are represented as, I don't know how you say that in English, anotaciones en cuenta. Maybe, I don't know if someone can help me, but there is another, like there is an entity that note how many shares do you have. And then there is a third way to represent that completely legal and recognized in the law, that is blockchain. So before that, what usually was done is that from one side you have the contract, like the paper contract, digital or not, but the contract, and then over this contract, you included a hash of this contract on the smart contract to be able that both rights were related. But in the process, to go to to directly to your question, in the process is you go to an entity, you put your money and you receive your tokens. You need to be sure that the token represents your legal rights.
Yeah, and those tokens also give me the right to vote for startups and all that stuff that we define in the tokenomics, right?
Yeah, the token, yeah, the rights are defined before you create the token. So it depends on the rights. So sometimes the token provide you with governance rights, sometimes other things. Okay.
All right. So going for, I have two questions. One more for the loans side, and another for the investment. But on the same thing, being agility and efficiency, can we get rid of all the bureaucracy of today, or with this, are we avoiding all the paperwork and people signing documents, or because it is a representation of an asset, we still need to have all the paperwork, and then we are only simplifying the front, the front office for the investor?
Yeah, it depends on the law of each country. If the law of the country recognizes the token as a way of representation of the legal right, then you can take all the paperwork out and you are working with the tokens and anything else. But if in the country the token is not recognized in that way, you still need the paper, and you need to link the paper with the token in a technical way, but you link both of them. In a technical way, you can say that if you have this token, this is related to that specific contract, like legal contract, and that you can operate with the digital token, but still all the legal right is represented not inside the token, but in a traditional contract.
Okay, so and can a borrower tokenize a loan that was executed the traditional way?
Yeah, there is like, okay, I thought you didn't want to go deep.
Yeah, that's what the audience is asking.
Yeah, okay. It depends. For the execution, you need also to take these kind of things at the beginning, because if the token is in the hand of the investor and there is no anything that has been, defined before, you can't take the token from the investor, because only the investor with his private key can take this token out. You cannot. It's not a question of legal anything. Is that physically you can't go to the wallet of the investor and take the token. I don't know if that was the question. So you need to define the system before to define how you are going to execute. You can say, okay, if this condition happen, we are going to burn the token, so the token lose his value, and we are going to wherever the solution at this point. Okay.
Right. So the answer is, if you already did it the traditional way, okay, it is possible, but we need to study that specific case.
Yeah. We are at the moment still. Well, there are some standardization with most common use case, but still the world is discovering how to transfer all this process of the traditional world to this
Right.
new world.
Yeah, it's not easy for them.
It's not easy.
So in the end, investors still need lawyers to make sure that the tokens really represent economic rights, right?
There are a lot of lawyers here.
Signing of papers that change, or
how many lawyers are connected to the session, just to know if I'm going to make a joke or not.
I'm not sure.
Yeah. Okay. No, well, yes, you still need lawyers. Lawyers are always needed.
All right. So what potential conflicts do you foresee between security tokens?
Say again, I was just, excuse me, but I was just reading the question of the chat. Could you say again?
Okay. No. Yeah. What potential conflicts do you foresee between security tokens, financial asset tokens, and traditional financial products like shares, options, etc.?
What kind of conflicts? I mean, I'm not sure that I understand the question. The security token.
For example, in situations like a liquidation, how do you balance all the rights in the token and on the traditional financial products like shares or options in the company?
Yeah, as I mentioned, the token is the traditional product. What for example, a share of the company with the new law, for example, in Spain, the token is not a representation of the traditional, value or instrument, is the instrument. So,
right. So in the end, you own shares.
you own shares, exactly. If you own 30 tokens, that means that you own 30 shares.
Correct. So what is the difference between a token issued by a company versus a traded share? Again.
Yeah, exactly. Yeah. Again, here it is a regulatory question. So when you say a share traded by a company, I guess that you are talking about a share publicly traded. Not I understand that you are talking like shares traded in the Nasdaq or share trading in a stock market, in a public stock market.
I think that's not an assumption in the question.
No.
Comparing with shares owning,
Okay.
private shares.
If it's not the assumption, again, the token is the representation of the share. It is
Like,
the share.
imagine, for example, that you own shares of a company and they give you a paper saying that you own those shares and with the rights written down there.
Yeah.
That's it. It is a token. In the end,
Okay.
it's not in blockchain.
In here, you don't have this, let's say, this paper issued by an authority, but you have two things. You have a paper at the beginning, which is called like the public paper that describe what the token represent, and when the token is issued, you also have a regulated entity that say that this token that is registered in the blockchain is your token.
Mm-hmm.
So, but it is
So in the end, a lot of questions come to the regulatory thing, and we will address that in the next session.
Exactly.
But,
I think that, yeah.
But anyway, a question is, in which countries should we, tokenize assets, or where is it illegal or regulated, or where to go?
Yeah, exactly. Well, most of the country, for example, in Europe, there is new regulation that are making trading with tokenized shares and tokenized any kind of financial instrument possible. So there is from this March, not many years ago, this March, the law came into force to allow that. So it's completely new in Europe. And there are other jurisdictions that are also allowing tokenizing and trading with tokens in a very, let's say, developed way. In Singapore, for example, in some way also in the United States, in UK, and in Europe. Those are the, let's say, the most advanced regulations worldwide, I think. And other countries that are developing also their own regulations specifically for this kind of financial instruments. Okay, for all that is related to cryptocurrency is different. There are also regulations that are emerging also worldwide, but let's say that is like a different, is less regulated in general, because when you go to security tokens or you go to digital assets in general, you come into all the regulation in the countries related to securities, to trading with financial instruments, and this is usually very, very, very regulated. So the most developed countries are those that I mentioned.
Okay. So another question is, doesn't do CoreShare the same? It distributes a loan to many micro investors.
Yeah, I didn't understand.
CoreShare is a company, and they split a loan for micro investors. So they do like crowdfunding for loans, right?
Oh yeah.
So
Okay.
there are a lot of companies. What's the difference between what you do at Token City and this kind of companies?
Yes, as I mentioned at the beginning, the first slide, for me, tokenization is the evolution of the crowdfunding. So again, you are distributing the rights among a lot of people, this is crowdfunding. But in this case, with tokenization, these people that invested own this piece of value and can trade it very, very easily. So I think that apart all the traceability and efficiency and velocity of all these kind of transactions, and apart that, I think that the main value for tokenization is on the liquidity that you obtain when you make very easy the secondary trading of this piece of value, of these tokens.
Okay.
Which is not only the crowdfunding, but is what the investor is going to do with the token after investment.
Right. So in case of serious problems, when everything goes wrong, technical problems that may produce loss of assets or tokens, or legal problems, is there any court, law, or process that protect the agreements?
Yeah, for example, in regulated market, they force you to create like contingency plans. Yeah. So, for example, kind of plans say, okay, if this blockchain disappear, what is your plan to transfer or all these tokens to another blockchain, or all these kind of things? What are you going to do if there is any kind of technical problem or whatever? How the value of the investor is going to be protected? So all the regulated markets force the operator to do that.
Okay. So, by the way, if anyone wants to know more about Token City, if they want to invest in you and know more about the startup, if you're fundraising or whatever, how should they, contact you?
Yeah, can I share here my contact information?
Yes,
Yeah.
for sure.
Sure,
Yes.
please.
Okay.
Okay. And another question is, are there already angels or VC funds using tokenization? How is that going?
Sorry.
Are there already angels or VC funds using tokenization?
Yeah, sure, for sure. There are there are, for example, in the use case that I share for today, maybe I can just share this example just as an example. But for example, one of our investors, in our own round, for example, we offer the investors it's a tokenized investment. But apart that, there is a specific group of investors that they invested through a DAO. DAO is a tokenized organization. It's what is called a decentralized autonomous organization. And for example, when we presented to them to obtain the investment, we presented to a group. And right after our presentation, they connected their wallet, and with their tokens, they voted. They voted to say if they wanted to invest or not in Token City. And happily, they say yes. And so through their DAO, they could transfer, they could make their payments in crypto to the DAO, so that the DAO had the money to invest into Token City. So there are many more and more organizations that are like an investor that are moving to this kind of investment. And for example, this new law in Europe and many places in the world, there are funds that are being tokenized. That means that the position of the investors in the fund, it is a token or group of investors and everything that are, migrating to this new format of investing.
Okay, so anyway, we know that there were bad experiences that were really bad, right?
Yeah.
We know that, but like everything, like all technologies, it is getting better, and now we can tell that a lot of players are already tokenizing with success, and with much less friction and everything.
We did a study last year all around Europe with 100 fund managers around Europe to know how, if they were interested in tokenization, how they see tokenization and everything. And more than 85% say that if they wasn't prepared for the massive tokenization of the economy, they were going to be obsolete very, very quick, because they were thinking that there are some regulatory aspects and that prevented them to go very heavy into the sector. So they needed more clarification. It was last year, so they needed more clarification on some regulatory aspects, but they were, I mean, convinced that tokenization was going to evolve very quickly once everything from a regulatory aspect is clear.
I have a lot more questions, but it is not possible. Time is running out, and I need to give the floor to Ella to close the session. I don't want you to answer this now, because I will ask you in the next session. But I'm wondering, what should angels fear or be aware of when they invest in tokenized assets? But let's wait for the next session, and maybe we can address those other questions. And thank you very much, Yael. And Ella, please, the floor is yours.
Thank you, Pedro. Thank you, Yael. Great question. As closing, Yael will be answering that question for us on May 3rd. Same time, almost. The topic of the next session will be how to make tokens tangible. Yael will explore more the customer journey, how it looks like from behind the scenes, what are the steps to take to become a token holder too. And for the ones who don't know us yet, you can also always follow us on LinkedIn, check out our new events there, and also on our website as well. And you can also subscribe to our monthly newsletter to stay updated on the topics related to angel investing and currently tokenization. Thank you, Yael. Thank you, Pedro. Thanks, everyone, for joining the call. I hope you all subscribe to the next session, and I hope we see you all there.
Thank you.
Bye-bye. Thank you.
Good evening. Bye.
Thanks. Bye-bye.